This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. Happy Friday. Crazy day. Crazy end of the week. It's 3:25 in New York as I'm recording this, and it seems that the Wednesday euphoria after hours with Meta and Microsoft was a fake out because the markets are kind of in meltdown mode after the new tariff chart or table that came out Thursday evening. And the Dow is down 1.2%, but more troubling is the NASDAQ is down 2.25%, the S&P is down 1.6%, and you have the Russell futures down 2% as well. Pretty much a bloodbath all across the board. Before I jump into the breadth numbers, I did have a few housekeeping items and news themes that I wanted to share. Mostly bearish, but some bullish. So one bit of news that, with all the headlines going on, I don't know if you've seen, but President Trump said on Friday he has ordered 2 nuclear submarines to move closer to Russia in response to highly provocative statements by the Kremlin. That's not great news for risk prices. It's good news for the VIX. The other bit of news, which is kind of semi-related and unrelated, it's more of a science thing, but there is a massive interstellar object named 3I Atlas, which is the size of Mount Everest or Manhattan. And it is one of only 3 ever recorded interstellar objects that came out of our solar system into it. And it may pass, the closest path to Earth will be December 19th. There's a Harvard scientist, astronomer, that has a potential hypothesis that this is an alien probe. So, hey, you never know. So I'll link that story. The third one I have is a market technician. If you know the McClellan Summation Index and the oscillator, Tom McClellan just sounded an alarm on a podcast interview that he just did on Financial Sense. I'll publish that as an embedded YouTube video in the show notes. You can check that out. But the bullet points basically points to a liquidity crunch, the Fed tightening or not loosening, which is the same as tightening in some people's eyes, like Jerome Powell, weakening breadth, which I've been talking about for months, and just the bearish seasonality with multiple red flags that are flashing in the markets. So take a look at that. And the last bit, which is important, is one of my mentors, Bill Cara, who I've podcasted and written about in the past, is now finally on Substack. So he'll be creating free and paid content. He wrote a little bit about this morning the futures market and the downturn, unpacking the Amazon earnings as well. So take a look at his Substack. I would highly recommend you subscribe. A lot of what I've learned was from Bill's tutelage and teaching. Obviously, I've learned from other folks, my own experience, my education, my mistakes, but I would say the core fundamental of looking at the markets broadly, globally, and the interconnected pieces of how everything pulls and pushes on each other, I definitely point to Bill for that, as well as how to use some of the oscillators and technical indicators for intraday analysis, as well as swing trade analysis. But overall, he's a market genius, market wizard. So check out his page. So without further delay, we had on the NYSE 113 new highs today versus 366 new lows, 24% advanced or 2,000 461 issues. 74% declined, which is like 7,600 stocks. 48% below the 50-day and 45% below the 200-day. Looking at Mag 7 and mega caps, they are all red. You had Microsoft, as we speak, down 1.75, Apple down 1.9, Amazon down 8.3%, Meta down 3.3, Alphabet down 1.5, Nvidia down 2.5. That is the market. That is the market. Markets can't rally when you have the Mag 7 down like this. And you take a look at just the financials. JP Morgan is down 2.3, Bank of America 3.1, Wells Fargo 3.3. That's just not good news. Looking at sectors, there were 3 sectors in the green. I think you can guess what they are. Soups, household good toilet paper, cleaning supplies, laundry detergent, chicken wings.
That's my train.
Stand clear of the closing doors, please.